CNBC-TV18, embarking on a quarter century of excellence.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me, as always, Shruti Mishra. These are the top headlines from the startup world. Impact investor Omidyar Network decides to halt India investments and pull out of the country by the end of 2024. The organization, backed by eBay founder Pierre Omidyar, has invested in 90 startups and social enterprises in India. These include unicorns like Vedantu, Daily Hunt, and Dealshare.
Mental health tech startup Better Space raises $4.5 million in maiden pre-seed funding round led by accelerator Pedal Start. The company will use funds towards improving its existing offline and online services and developing new product range.
Swiggy in the last 12 months has disbursed loans worth 102 crore rupees to its delivery partners, of which 10.1 crore rupees was disbursed in November alone. Swiggy has partnered with Better Place and Refine to enable such loans.
Taiwanese EV maker GoGoRo makes its formal entry into India with electric scooters and battery swapping stations, promises to invest $2.5 billion by 2030, seeks government subsidy for both plug-in EVs and battery swapping.
A U.S. federal jury rules that Google's Android App Store operated as an illegal monopoly. Video game maker Epic wins a major court battle over commission charged by Google for access to the App Store. Google says it will challenge the verdict.
Apple offers to let rivals access its Tap and Go mobile payment systems used for mobile wallets. Reuters reported that this was in order to settle EU antitrust charges. The EU competition enforcer is likely to seek feedback next month from rivals and customers before deciding whether to accept Apple's offer. Well, those were the headlines from the startup world. The big story today: impact investment firm Omidyar Network India has decided to exit India and transition out of the market by the end of 2024. Now, the impact investor told CNBC-TV18 that it has achieved its primary objective of catalyzing impact. Aishwarya Anand joins in with more. Aishwarya, what's going to happen to Omidyar's India portfolio then?
Well, what we are hearing is that over the next 2 months, Omidyar Network's leadership team will assess how best to manage its portfolio as it plans to exit India by the end of next year. The decision has put a question mark over Omidyar's holdings in over 90 startups and social enterprises, which include unicorns such as Vedantu, Daily Hunt parent Verse, and Dealshare. The portfolio also includes 1mg, Bijak, Bounce, Masai School, Farmart, Healthcart, Indifi, among others. Some of its investments have also come in the social sector, having backed the likes of Teach for India, Give India, IIM Ahmedabad Startup Incubator, and even the Indian School of Business. What's to be noted is the sudden decision to halt operations in the country comes just within a week of Omidyar Network India leading a 50 crore rupee Series A funding round for dairy fintech platform DGV. The firm told CNBC-TV18 that its decision was heavily informed by the significant change in context and growth in the economic landscape for its team in India. Omidyar Network, which was in fact set up by French-American entrepreneur and eBay founder Pierre Omidyar, also believes that it has achieved its primary objective of catalyzing impact in the country. There is more Indian-led philanthropic and venture capital than ever before. The country has a vibrant startup sector, and several funds now have a middle and lower middle income focus as part of their investment strategy, the firm said in its statement. Omidyar, which has invested $500 million in both profit and not-for-profit enterprises, will now focus on exits while maximizing returns with zero disruptions. We also learned that conversations on exits have started with portfolio founders, with the assurance that Omidyar Network will remain in the country until the end of 2024 and even after if needed. This move will impact all 37 members in its India office, who will be transitioned when Omidyar exits India by the end of next year. Back to you.
So Omidyar Network to exit India by the end of next year. Thank you so much for those details, Aishwarya. But moving on, natural personal care D2C firm Nat Habit has raised $10.2 million in a Series B round led by Bertelsmann India Investments. Existing investor Fireside Ventures, along with other investors including Amazon India Fund, Mirabilis Investment Trust and Sharp Ventures, also participated in the round. Founded in 2019, Nat Habit offers organic skincare products such as hair oils, masks, scrubs and face creams. Joining me now to discuss the fundraise understand the growth strategy is Swagatika Das, the co-founder of Nat Habit. Swagatika, thank you so much for joining us on Startup Street. Now, Nat Habit is a natural beauty and wellness brand in the D2C space, which is a very and highly competitive space and is also a $30 billion market. So how are your products different from your competitors?
Thank you so much for having me. I think the biggest difference that we have is the products that we make. These are formulated in our own R&D. These get manufactured in our own facility, in our Ayurvedic kitchen. And we make them out of fresh milk, fruits, spices, nuts, which you've never before seen in the personal care space. So that helps us break that clutter in this natural beauty personal care space.
All right. You've raised over $10 million. So what will you use the funds for? Any new products in the pipeline? And also, which are your early investors that are exiting post this?
So we'll be building out a natural hair color, a shampoo, conditioner. These are pretty much the bigger bets that we are putting on R&D across. There, of course, will be a baby care range that will get extended out as well. And in terms of investors, early investors such as Whiteboard Capital and a few angels who supported us right from the early days, who believed in this fresh mission, they are the ones who we're giving an exit. We're very, very happy to have shared this journey with them, and a big thank you to them.
Absolutely. You also have 35 product lines across moisturizer, hair oils, face wash, and uptans. So what's the average order size, and what are you betting big on at this point?
So we have an average order size of about $650. People typically add about 3 to 4 products in their basket across skincare and hair care. We are betting very, very big on our fresh face washes, our fresh Malai moisturizers, and our hair color, the henna hair color that we have right now.
All right, so a few things that you're betting big on over there. And what about revenues that you're currently clocking? You're eyeing about 4x growth. How soon will we see this, and what are the targets for this year?
So we are looking to close about 110 crores this financial year. By 2025, we should be doing about 350 crores annualized revenue. We look at offline and the new product launches as a key levers for growth, where we are also working towards brand development and brand awareness increase.
All right, and you're currently present only online, and you're hoping to venture into the offline space post this fundraise, right? So when will we see your first physical store, and in which city? What are your expansion plans going forward?
So we're looking to enter the offline space not with our own stores. We'll start off with the modern trade and general trade channels first. April is the target that we have for ourselves to put our products out there on the offline shelves for the first time.
All right. So the offline space you'll first expand into, it won't be your own shop. So when will we see your first store?
So we're looking to have 2 stores before FY25. So that will be in Delhi NCR to begin with. We'll then head over to Bangalore and Bombay.
All right. Swagatika, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you so much.
All right, moving on. Indifi Technology is a Gurgaon-based lending platform that enables debt financing for small businesses, has appointed Sangram Singh as its chief executive officer. The company claims this strategic move reinforces its commitment to sustained growth, innovation, and providing enhanced financial services to the MSME sector. Indifi has disbursed over 96,000 loans across 400+ cities with a total disbursement value of over 5,100 crore rupees. And to talk to us about the road ahead at Indifi, joining me now is its newly appointed CEO, Sangram Singh. Also joining us is my colleague Arundhati. Sangram, welcome to Startup Street. As the CEO, you will drive growth of the core Indifi franchise, and founders Alok Mittal and Siddharth Mahanot are to drive product and segment expansion. Sangram, what is the top agenda for you? How are you looking at Indifi's expansion?
Thank you so much for giving the opportunity. Yeah, I think Indifi's had a great time in the last few years. It's really expanded very well. Like you mentioned, more than 96,000 loans have been dispersed. The AUM has doubled over the last 1 year or so. And I think the first agenda of business is to continue driving the growth that has already been clocked. At the same time, work out on new opportunities, new partnerships, new channels, which allow us to pursue the objective that we have in the organization, which is of providing easier access to debt capital to MSMEs. And I think that's what's going to keep us busy for the next 18 to 24 months.
All right. Sangram, Arundhati here. Take us through Indifi's offerings at this point, and how are you improving the experience for borrowers regarding credit access as well as the speed and convenience of the loan process?
Yeah, absolutely. I think the main thing that we try to differentiate is how we use technology and how we use data in enabling credit access to the MSMEs. You know, it's a very large segment, and I think everybody understands that there's a great opportunity in MSMEs. But what we focus on is working a lot with partnerships that allow us better access to data, which helps us take better decisions and reach out to the MSMEs far quicker than what we would be able to do without those partnerships.
All right. Indifi currently has assets under management in excess of 2,000 crore rupees. You recently launched instant business loans and have enabled working capital finance to D2C brands. What is the kind of impact you've created so far, and any new offerings in the pipeline, Sangram?
So new offerings are there, and I think we'll talk about it as we get closer to rolling them out. But our approach is to continue to do innovation in lending. As far as impact is concerned, yes, that's been one of the key agendas for us. So you will find that in our portfolio, more than 25% of the loans that we've extended are to women entrepreneurs. We have been reaching out to new to credit customers. Nearly a quarter of the customers that we do are again new to credit. We do expand beyond the top metro cities, and a lot of our loans come from tier 2, tier 3. The entire idea is to be able to reach out to MSMEs who would normally find it a little difficult, especially to get unsecured debt, and make things simple for them.
Right, and Indifi has dispersed over 96,000 loans across 400 plus cities, right? So what's the current NPA picture? And you have been profitable since 2022. So how do you plan to maintain that and grow as well?
So that's where the data analytics and working with partnership comes into play. I think it's very important to be able to use all the available data, including what's on bureau, what we get through GST, what we get through our partners, and to be able to take the right credit decision. I think risk has been touchwood under control for us, and I think we'll keep continuing that way. Again, to drive growth, we will be looking at more partnership, putting more focus around better reach out to the clients, and making sure that our presence is wider.
All right. Sangram, while MSME lending will remain the core business for Indifi, and you said you're also looking at new offerings, I believe you're also looking to explore opportunities in sectors adjacent to lending. If you can elaborate on that, and what sectors are you eyeing, and how soon will that be?
So most of our focus is, so there is a traditional lending, which is, providing working capital, basic working capital financing like a term loan, but there is also opportunities of doing payable financing, receivable financing, large credit lending, lines of credit, etc. And that's what we are spending our time on, to build more products which are required by our customers. And while the basic unsecured lending will continue to be a focus area, we're trying to see other adjacencies which will help us serve different types of needs of our customers.
Right, absolutely. But before we let you go, Sangram, talk to us about your SME portfolio and what is your outlook for 2024?
I think the outlook is positive. Like I mentioned, we've been focused on driving our growth through a lot of partnerships and reaching out to MSMEs in the training, in the servicing, and in retail segments. And that'll continue to be a focus area for us. I think as India moves towards a 5 trillion economy, the opportunity of expanding the footprint in the MSME will continue to be there. And I hope we can grow along with our partners and along with our clients and ensure that we provide better services to them.
All right, Sangram, we've completely run out of time, but wish you the very best. And many thanks for joining us on Startup Street today.
Thanks a lot.
On that note, it is time for us to head into a short break. But coming up next, where will India's consumer tech industry reach by 2027? A special discussion with Chirati Ventures. On the other side, stay tuned.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back to Startup Street. The India consumer tech industry is set to rise as the total addressable market will reach $300 billion by 2027, growing at a CAGR of 25%. This is according to a report by Chirate Ventures in collaboration with One Lattice and Google. First installment of a three-part annual report series, the report combines secondary research and primary surveys conducted with respondents nationwide. And to elaborate on the key findings of the report, joining me now is Anup N. Menon, Principal Investments at Chirate Ventures. Anup, welcome to Startup Street. Like I mentioned earlier, the current total addressable market of the consumer tech industry is currently valued at $100 billion and will reach $300 billion by 2027, as per your report. What makes you bullish? Where do you see the next phase of growth coming in, especially now with AI?
Yeah, thanks, Shruti, for having me over. Yeah, the sector's 25% CAGR effectively can be attributed to both, say, macroeconomic factors and also probably the sector-specific dynamics. The industry is sort of benefited from macroeconomic conditions, including rise in GDP per capita, a rise of disposable income, widespread internet penetration, and definitely the growing trust which users have on some of these online platforms, backed by the digital public infrastructure which is in place.
All right, as we all know, India's digital public infrastructure has strengthened, whether it's ONDC or payments. Where do you see the next wave of growth coming in? Also, if you could elaborate on the population scale solutions that have played a major role in unlocking India's consumer potential.
Yeah, I think Chirate has been investing in the consumer tech space for the last 17 years. We've sort of seen this journey almost with a front row seat as such. I think we are at exciting times where the digital public infrastructure which has been laid out has democratized access and reduced the cost of this intermediation, right? A case in point, I think a lot has been talked about the overall addressable market itself. But when you look at a startup like Lenskart, which from Chirate's own portfolio, it's created now a $450 million enterprise with just about transacting user base of 20 to 25 million. The DPI, and especially with the newer platforms like ONDC, which has picked up pace in the last few months, is effectively trying to address this asymmetry, as we say, in access, affordability, and availability of products and services through the existing platforms.
Okay, let's now, Anup, delve into some of the sectors you've mentioned in the report. Online and professional gaming is on the rise in India, and the report suggests that there is an increasing number of active female gamers, which is close to 60%. But this sector has been marred by regulations, Anup. So what makes you bullish on gaming?
Yeah, no, firstly, on the number of 60% is effectively coming out from our samples. Sample size of the respondents, 60% of them were female gamers. But interestingly, they were all mostly into puzzles and casual games rather than the hardcore, mid-core games as such. Rise of women gamers overall and gaming studios who are building out female playing characters is on the rise worldwide as well. We recently saw, say, Grand Theft Auto, the GTA 6 coming up and introducing for the first time in their 25-year legacy, a female character called Lucia as well, right? I think India will just follow the same path. Yes, this sector has been marred with, regulations. It has taken a slight hit. But from an investor's perspective, I think it has brought a lot of clarity, I would say, in terms of the legality and how the revenue streams and profit pools are going to rise.
Also, Anup, e-commerce and health tech are also gaining traction among Indian digital consumers due to the shift from offline to online channels for apparel and groceries. Also, health tech is growing at a CAGR of 40% almost, with online pharmacy being the most used platform in metro and tier 1 cities. So what makes you bullish that this growth momentum will continue?
Yeah, no, organized retail overall in India is just about 18-20%, right? And online is just about 7-8% of that, of the overall pie. Same, probably digital health is even more lesser than that. With the growth momentum in e-commerce will effectively be driven, as I said, about the rise of these niche segments of consumers, their higher disposable incomes, and the need for them, for brands, the need gap on brands and to fulfill that opportunity that lies. Both on e-commerce and health, again, I think we're seeing the tip of the iceberg, and there's a lot more to come in the next 5 to 10 years.
Anup, let's now talk about the key success factors for scaled impact in the consumer tech industry that the report talks about, like product innovation, vertical integration, you've got omni-channel strategies and more. If you could elaborate on them.
In our 17-year journey, I think a lot of founders have experimented and figured out at what points do they sort of venture into new strategies, right? And that's how we were able to sort of bring these 5 pillars together and put this as a customer success, a consumer tech success playbook as such. The first pillar obviously being product innovation. I think gone are the days where just as a marketplace, you could rely on trading margins and tend to your customers. Vertical integration from our end effectively means that you're taking more control of the entire value chain, be it manufacturing, supply chain, distributions. On the omni-channel piece, again, we know that there is a part of India which is still consuming a lot of products and services offline. The ability to sort of cater to that segment is by showing presence on ground, building trust, building a brand for yourself. Spoken about DPI, that's the 4th pillar. And last but not the least is internationalization, which effectively means Indian brands which are looking at adjacent geographic markets, could be with similar user behaviors.
All right, Anup, before we wrap up, talk to us about the emerging trends such as social commerce, immersive shopping experiences that are kind of reshaping the global consumer landscape today.
With the rise of social media and the influence of social media, I think there are, influencers who effectively are able to leave an impact on the purchasing decisions or the purchasing aspects that a user goes through, right? Especially in the tier 2, tier 3 markets where we believe it is still not a DIY, but more of a DFY market. And on the rise of experiential retail, I think while there is an ability of the digital platforms to provide infinite catalog, still commerce and retail still remains a touch and feel. People would like to experience a few, elements through technology, see how, say, a shirt or a trouser or a eyewear would look on them before they make their final call on purchase.
Okay, thank you so much, Anup, for joining us on Startup Street today and taking us through the key highlights of your consumer tech report. And with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.